think the public offering of long-term infrastructure bonds that IDFC has announced is a very attractive opportunity all around for all stakeholders. We firmly believe that it is a win-win for all stakeholders. It is a very important instrument to better intermediate retail savings into infrastructure development. As we know, the needs for infrastructure financing are very large, and this is a very important mechanism by which the government can better intermediate retail savings to finance the huge infrastructure needs of the country. We certainly believe that from a retail investor perspective, this bond is a very attractive offering for a variety of reasons. IDFC is a very unique organization that is focused on infrastructure development in India, and we are a AAA entity. From an investor perspective, the tax-adjusted yield that is available to the investor for investing in these bonds is very attractive. To give you an example, for somebody who's in the 20% tax bracket, the yields could range anywhere from 10.5% to 13.5%, which is by a wide margin much better than anything else that exists in the landscape for fixed income type of investment opportunities that are available to retail investors. Now, this tax benefit, as you know, is available for investments up to 20,000 rupees. But for the surplus liquidity that an investor has, this bond would be a lot more attractive than putting money into a fixed deposit or into small savings schemes, etc. Because what you're getting is an ability to invest in a very high quality organization such as IDFC. The investment is extremely safe because it is a AAA rated entity. The bond is rated AAA, which is the highest rating that a debt instrument can receive. IDFC's financial stability is extremely strong. We have 10,000 crores of net worth, 26% capital adequacy. Our asset quality is very strong. Our net non-performing assets on a 35,000 crore balance sheet are only 0.15%. And we are a very profitable entity. Our profits have grown at 28% compounded over the last 5 years. And we certainly see the prospects for infrastructure over the next 3 to 4 years to be very substantial. In fact, as we've outlined before, we hope to triple our loan book growth over the next 3 to 4 years. So really investing with an entity that understands infrastructure, is a very high quality entity, is a AAA entity, so it's a very safe investment, and it provides a tax adjusted yield that is very attractive relative to any other instrument that exists in the landscape in terms of alternative investments that a retail investor could look at. So we feel that this is a win-win for all stakeholders. We certainly hope and are optimistic that the reception to this public offering would be quite substantial. Our limit in terms of the amount we can raise through this offering is 3,400 crores, but that limit we can raise in more than one tranche up to March 31st. The current offering that we are doing of infrastructure bonds opens today, which is the 30th of September, and runs up to the 18th of October. As I said, on a 35,000 crore balance sheet, our net non-performing assets are 0.15%. So it's extremely low. It's very low relative to anybody else in the landscape. The other thing I would like to point out is that our return on assets is by a wide margin the highest in the industry at 3.5%. Thank you very much.